Neeraj Dewan joins in to chat about his take on the markets. Neeraj, as big as a relief as days like today may be, but it seems like what began with the domestic issue has now gone global. Again, fresh, tariff threats coming in between China as well as US, and now China devaluing its currency. What is the message to the investors at this point in time?
Yeah, good morning. Definitely, till last Friday we were reacting to domestic cues, our domestic slowdown, FPI issues, and we've had this relentless selling from FPIs from the last so many days now, which is continuing even now. So I think from yesterday, I think we are reacting more to the global cues. But one thing which is positive is that we are not reacting as much as the other Asian countries. So our outperformance is visible since yesterday as far as the other markets are concerned. I think that is more to do with one, we've seen earlier also, though we do get impacted whenever there's a trade war, there will be a slowdown linked to the trade war. So we will also get impacted, but the impact on us is comparatively lesser than what we will see in other countries, maybe China or US. So our impact will not be that much. So keeping that in mind, I think that is why we're seeing less, reaction in our markets as far as that is concerned. Yesterday also the other markets were really down a lot, 1.5–2%. We were not that bad as far as compared to the other markets. So to investors, I would say that I've been recommending to my clients also that one thing that we need to keep in mind is that even after seeing messages coming in from the finance minister, from the finance ministry regarding the FPI tax, that they are willing to talk to them, they're willing to do something about that. Still, we are seeing this selling continuing as far as the FPIs are concerned. In fact, Friday and yesterday were two big numbers we saw, and as far as the FPI selling is there, I think that needs to stop somewhere. So just hope, with hope you can rally a bit. Maybe today also we're seeing some hope rally, or which may continue for a day or two, because tomorrow again we have the RBI policy. But then till any concrete steps are taken, until we get some of this relief from the FPI selling, we can't really make a case for market rebounding and doing well positively for a sustained period of time.
What's the strategy you'd recommend, Neeraj? And I know that you're always looking at the longer term, but in the meantime, when investors are possibly a bit nervous, particularly with respect to broader markets perhaps, what would be the strategy you'd recommend? Are there certain pockets that you feel are still looking better in terms of valuations at these levels?
See, there are a couple of pockets which I'm looking at right now. One is the consumption space. We were looking at the numbers which have come, whether it's Dabur, Godrej Consumer, Nestle, Bata, even a small company like Venki that we track. There is definitely not that bad a situation when you see their numbers. There is still volume growth, and in some cases even margins have improved. So looking at that, I think domestic consumption is one which has earlier also had come to our rescue, which may be again coming to our rescue if things were to revive, or if economy were to rise from these levels. So domestic consumption is one where I would like to focus on. And second is our infrastructure related sectors. So there also I feel that the order books are strong, and the kind of liquidity which now government is infusing, and you've seen so many OMOs happening, plus interest rates are down, and plus there's another cut expected tomorrow. So with execution, with the possibility of execution picking up, liquidity, low interest rates, I think that is one space where again investment should start kicking, and execution will start improving the top line of most of the companies there. So that is one space. Plus even in the banking space, you have banks which are lending to corporates, which are lending to small businesses. So there I feel that we've seen a good correction there, and I think there also I feel that one can be invested in.
What about some of the traditional defensives, IT, pharma, perhaps as a hedge, Neeraj? Anything there, even as just a safer option?
See, IT is one space where the numbers were mixed this time. The Infosys numbers were good, and I think looking at the rupee weakening right now, which may benefit IT. So IT may continue to play the defensive for the time being. So, but I'm not really looking at IT being outperformer for a longer period of time. But in the short term, it may outperform and may be defensive. But pharma, again, I want to see some clarity emerging there, because pharma, we've been talking about bottom formation for so much time, for last 1 year maybe, but things are not improving there. You see that, if pharma, you've taken bets, but they've not really resulted into any return. So pharma, I'd like to avoid till I see some good numbers coming in from pharma companies, some resolutions happening concretely for some of these companies. So then only I can take a call on pharma, but for the time being, I'll avoid pharma.
Okay, so avoid coming in on pharma then as well. Neeraj, what are you anticipating when it comes to the policy this week? Also from perhaps the point of view of what we may see as a calibrated approach for the rest of this fiscal, what do you think is warranted currently?
See, basically, we've seen this 0.25 cuts happening from RBI. I feel that they should at one go at least do a 0.5 kind of a cut, and maybe then take a pause the next time, because what is required right now is more of a positive sentiment, more of a kickstart which we need. I think if some messages come either from RBI or from the government that they are really serious to kickstart the economy, I think that is what is required right now, because it is ultimately the feel-good factor which has to come back among the private investors, among the corporates, to kickstart the kind of expansion they would have liked to do, but they have all stopped because of the current scenario, because of the current slowdown. So that is what is required. Some confidence boosting measures from the government and the RBI is what is required right now.
Okay, so that's the outlook coming in there. And on banks specifically, I know you mentioned a few of the smaller banks, but just also to get a sense on what you're expecting in terms of movement, in terms of both price and earnings with regards to some of the bigger corporate names.
See, as far as the banks are concerned, we are positive on names like DCB Bank. ICICI Bank came out with a good set of results. So I'm positive on these banks. But as far as the PSU banks are concerned, though I'm positive, but I'm slightly cautious right now. I would like to, kind of results that we saw from some of the big banks like State Bank were also not encouraging at all. So I would like to see some resolution happening in at least one of the big corporate names which are into NCLT. At least one of the top 3-4 which are in NCLT should get resolved soon, to give some sort of impetus there as far as the recoveries are concerned. So right now that has not happened in the last quarter, and that is what is reflected in most of these banks, which have to aggressively keep on providing, aggressively write off, and that is what led to the kind of stress which is still seen in this quarter. So that needs to stop. That will stop only if you get a good set of recovery coming in, at least one account to start with, and then resolution should be faster than what they've been till now. So that is what is lacking right now. So I would like to see some of that happening. I'll be positive on some of the PSU banks, but to make fresh investment or to put more money there, I would wait to see some clarity on that front.
Right. Okay. Neeraj, also wanted to assess really what is it that you're making of the slowdown when it comes to autos in particular. It's lasted for a while. That's where the first signs of the slowdown really trickled in, and it seems to be getting exaggerated now. Also, it seems that it's more global in nature too, because now you had the US Class 8 truck orders, which also have dipped down quite considerably. Do you think in this opportunity there is a reason to buy into, or would you still steer clear of these names?
Actually, I would like to be positive for the time being, in the sense that I like to buy into some of the auto names, though I like to stagger my buying. Because there is the hope that one interest rate cut, liquidity coming back to the system, and a better second half because of festival season. So because of these reasons, I would like to keep my hope intact for the second half, and with that, I would like to buy into some of the passenger, auto names. And according to my understanding, this is the last chance for the recovery. If the second half doesn't pick up, then it can be pretty serious than what we already anticipating. But with the kind of liquidity, low crude prices, inflation being low, I think that demand revival should start sooner than what we are anticipating, and maybe in this month or next month, you will start seeing some green shoots there.
It's great to have you on the show. Thanks so much for taking the time out and speaking with us today.